Good morning, good evening, good night, wherever you're watching this transmission. It is I, Mike Martins, coming back to you, coming back in a flash. It's been a while since I spoke to you guys. Had some family business to take care of. My beloved father, Antonio Manuel Martins, passed away 2 weeks ago, and I'm going to make him proud. I'm going to make him proud. I've been trying my whole life, so I want to thank everyone for all their kind words and supportive words, and just I want to thank you guys for that. You guys did a lot for that. You guys helped me through a really rough patch, and yeah, I just want to say thank you. And I got my man Owen in the comment section. Owen, thanks so much for being there for me when we went out. That meant a lot to me. So if you're bored, get off Facebook, get on minds.com. I also have a tip jar if you want to support the transmission. Monetization, my monetization keeps crashing, and I'm getting more views per video. I'm getting more subscribers than ever. Okay. But then on my analytics, I get less than 30,000 views in a month, but I'm getting, on my videos, I'm getting 50 times the views I had from before. I'm getting less views than I did when I had 2,000 subscribers. So I don't know what's happening with the algorithms on YouTube. So I am on BitChute, guys, if you want to follow me on there. And here it is, guys. Last week's Mike, 3 weeks ago, Mike in the Night. That's 3 weeks ago. That's before my dad passed away. And then we have all the other shows here. Morning Coffee with Mike. And housing crisis, second mortgage borrowing out of control, Canada, New Zealand housing collapse. These 5 U.S. cities ready for collapse. Oh, man. Baltimore, all those places. Places are in a lot of trouble right now. Violence is out of control in some of them cities. Yeah. We're not going to touch that. We're not going to touch base with that tonight because we got... we're going to do that Mike in the Night. We're going to be talking about maybe dangerous cities to relocate to. And Kevin Thompson in the comments, always good to see him. Woo! It is Trends in the Housing Market, guys. Broadcasting from Merritt, British Columbia. Broadcasting from Australia. No. We start in New Zealand. All our friends down in New Zealand watching us. And I want to send a shout out to Keith, who is in Auckland, New Zealand, watching every episode of Trends in the Housing Market, even back-watched every episode for 2 years. Thank you, Keith. I want to and then from New Zealand to Sydney, up to Melbourne, and across to Perth, and then northwest to London, up to Ireland, and across the pond to Canada, and south to the United States of America. Broadcasting to every English-speaking country. Trends in the Housing Market. There's so much happening. We're going to have a very special guest on the show tonight. Really nice guy. Really, really good friend of the channel. Really good friend of the channel, and I want to surprise you guys a bit, but I'm going to tell you who it is because I want you guys to get over there and subscribe to his channel. It is Uneducated Economist,
Danish debt,
and he's discussing here about a lot of the mortgage debt that's happening and packaged securities, and European markets right now are buying back their own debt, and a lot of European countries cannot pay back their sovereign debt. So it's getting to a point where a lot of countries are buying up gold right now. So let's get into first what's happening in the markets before we kick off what's happening in the housing market and Uneducated Economist, who's waiting on the sidelines. Okay, the S&P TSX closed at a healthy 115 points. Plus, the S&P 500 is up 2.12 points at 2,800. It just over the green. The Dow is down 22.45 points, closing at 26,007. Canadians, US dollars, 75 cents. Crude oil, 52.64. I sold out of oil today, guys. I completely sold out of oil. Oil's not on a good trend right now, and I think things are going to get pretty shaky when it comes to oil. I know oil's undervalued. I believe oil's undervalued, but you know what? I think oil's going to take another hit. A lot of people are shorting oil now. Bitcoin is at 15,645. That's up like 20 grand Canadian. Holy crap, it's that high. Oh, that's Canadian. 15,000 Canadian. Gold, most important, gold. Watch for gold, people. $1,509.80. Gold is sitting tight right now, guys. Sitting tight. $1,509. That is about $2,000 Canadian. And gold's breaking a lot of records. Look what's happening with the Brazilian real and all the other that's happening. All these trillions of dollars in negative yielding debt. So you see what's happening with this whole hyperinflation crap. So you guys know what's going on. 10-year bond at 1.64, 1.68. Here's $1 million. Pay me back $800,000. Yeah, it's like a boss I used to have. Whenever we put gas in the car, the company car, he'd want a receipt because he'd give us $20 for gas. He think we'd put in 10 and keep 10 for ourselves or something, right? Anyways, I'm just kidding. But yeah, here's $1 million. Give me back 800 grand. This is the best deal. I mean, try to sell this to a mobster. They'll be like, what? Okay, volatility looking just a little bit down at 19.49. And the Nikkei down and up right now. Markets are open in the Nikkei 225, looking like it's up right now. It is going up right now. It's shooting up right now. All right. So, guys, debt.ca. If you're in Canada watching this, it's called debt.ca. This is an income, monthly income. Add other debt payments here. And then it asks you what you pay for alimony, child supports, whatever, government assistance, all this stuff here. Please fill this out, guys. Let me, comment below. Let me know what your TDS is, what your total debt service ratio, debt to income ratio, whatever the hell you want to call it, CGS. There's a million names for it. Let me know what you guys, where are you guys at? Are you guys at a healthy 35% total debt service ratio? Are you guys sitting at you have money for food at the end of the month? Anyways, we got a Gary Medeiros in the house. A lot of respect to Gary Medeiros. He came to my father's wake in Brampton, Ontario. Lots of respect to him and Steve the plumber. I will get back to Ontario soon enough. I had to tie up a ton of loose ends here in BC. I'm still tying up loose ends. I'm still like back and forth on the phone trying to get things rolling here. So Dick Quacks from Auckland, New Zealand in the house. Who do we got? Real Kevin Thompson is a realtor. We got Liberty Returns back in the house. Who else? We got Lord Humongous. Woo! Woo! All right, guys, let's find out what's going on. Let's get Uneducated Economist. I love this guy. I really do. This guy is true. This guy is true. I like this guy. He's got a good soul. So let's get him on the show right now. Hopefully he is ready by his computer. I told him to go out and smoke a cigarette. So I'm not sure. Yo.
Hey, do you see me?
Can you hear me?
Yeah, I can hear you.
Okay, guys. Here he is. In the full screen here on Trends in the Housing Market, Uneducated Economist coming out of Oregon State. Buddy, what's going on?
Hey, man, doing great. Glad to be here on your show. Thank you very much for having me on. Oregon's a beautiful place, man. It's nice and cool and sunny, and everybody's really happy here,
And it's good to hear from you. I saw your last couple of videos.
Yeah.
Things are getting pretty hectic, especially with all this negative yielding that's going on, and all this hyperinflation we're surrounded by. It's almost like we're trying to create a moat in between and trying to throw, the banks are throwing, the feds, the banks, policymakers are throwing everything in their toolbox to prevent this from happening. You tell us.
Yeah. These negative rates. This is one thing. You try and go back in history and try and look at different economic times to try and judge what's going to happen in the future. And negative interest rates is not part of it. There's no economics books out there that can tell you what negative interest rates is going to provide in the future. And, I go back and I try and read about some of these things that has to do with negative interest rates. And you go back and you look to see like where the negative interest rates were first started. And I found an article where Berkshire Hathaway was suggesting back in 2002 that people pay a negative interest rate for some of their shares for the privilege that the price of it would go up, right? He insisted that it's a speculation move, but that it's worth it. I mean, way back in 2002, they were talking negative rates, and that's all it really is. There's no real, when you were an investor, you buy something that you're going to guarantee to get an investment from. That was one of the arguments about gold, is that it just sits there, doesn't do anything. That's why you buy bonds, because it has an interest rate. But now they have negative yields. So the only reason to buy it is now speculation. the only reason why people bought gold back in the time. So now, what is it? Bond and gold now have these same speculation kind of, investors heading towards it.
Hmm.
And that's what I see happening right now. Once that speculation's over, I don't know what to expect after that.
Well,
Yeah.
we're seeing it happening in Europe. Europe has been, I guess, under the, under pressure with that whole Cyprus thing back in 2012, and with Greece and just runoffs on their markets, having to put caps on their debit machines because people were going to start running off the banks, and then the banks
Sure.
like this is like Europe is a good playbook, a good blueprint of what's going to happen here. But because we have so much more, I guess, industry, more exports, more, because Europe is broken down into different concentrations. But when you look at the United States right now, the United States bonds somewhat look good, only because even though they're negative, they're garbage, they're less than 2%. But Europeans are dumping their money in American bonds because they're getting negative in Europe. So they're keeping an eye on American bonds. What do you think of that?
Yeah, and that's what's kind of interesting. I mean, here you have this argument about a strong dollar and like how the strong dollar is hurting our exports here in the United States. This is one of the big arguments coming out of the administration, and yet these negative rates that are happening everywhere around the world is forcing people into the United States treasuries. Now, first, they have to cash their currency in for dollars, which
Yes.
strengthens the dollar before they can buy those bonds. And yeah, it just added, even though the interest rates are dropping here in the United States, it's adding even more strength to the dollar as this demand for dollars because of those weakening currencies outside of the United States. Yeah, it's, really at some point, as this dollar strengthens, as the dollar strengthens up and that churns, there's going to be no place to run. There, like, the dollar is it. That's it. That's the last place. Like, there's a lot of arguments out there when you look at Exeter's pyramid that gold is the final, liquidation. Like, everything kind of funnels through the dollar and into gold, but it's got to funnel through that dollar first. And so the dollar, even though they don't want it to strengthen, they would love to see it weaken to get our exports going, it may just go and strengthen all on its own just because of the fear that's going around the rest of the world driving it into that dollar. And then eventually that will fail too.
Because that's what's happening in Europe right now. Countries like Spain, Portugal, Ireland, and parts of Greece, a lot of even banks are buying U.S. bonds. A
Yeah.
lot of big corporations, they're just trying to get out of everything offshore. The Chinese were a little bit clever with their foreign investing because they can't really take money offshore. So a lot of them bought real estate now and parked their money in real estate. And you saw what happened on the entire West Coast. I got a question here from somebody here from, I think it's from New Zealand. William?
Whew. This is a difficult one. It's really hard to put a timing on things, and I am not a very good timing kind of person. Like, I can kind of see that there's trends happening, and you follow those trends. But to say it's going to happen by this particular day, I've always seemed to think that it's going to happen sooner than it does. Like, I see it and I kind of get anticipation built up, and I think it's going to happen quicker than it does. So really, even if I said it was probably going to be a year, it might end up being like 2 or 3 years, because I always think things happen faster than they really do. But it was an interesting point that you brought up there about the Asian buying coming into the West Coast. Now, with this strong dollar taking place and the weakening currency, you do know what's happening there with the Chinese and the people who have bought in here in the United States. A lot of those people ended up buying property here in the United States. They did it on credit using U.S. dollars as the bank back for the loan. So they have to pay back those loans in US dollars. As the Chinese currency is getting weaker, they have to come up with more of it in order to buy the stronger dollars. It's hurting them. They have to start selling off. So this may end up causing an exodus from the Asian market out of US real estate on account that they just can't come up with the dollars to pay it. The dollar strengthening to their currency. So
China and Russia started buying gold in and around 2009 when gold was sitting roughly at about $800.
yeah.
And that's when they started buying in 2009. That's when they started to go really heavy, those two countries. Now, because there was a lot of rumors that they were going to create another basket of oil countries and stuff, and then there was rumors of BRICS nations. There was a lot of rumors of people unpegging off the U.S. dollar. There was rumors of everything, and it's starting to happen, but it's happening way down the road, like 10 years later.
Yeah, and you gotta think like these things don't change overnight. You just don't all of a sudden like just change these shipping channels and all of a sudden it just belongs to these other. I mean, these things take process and time. And really, when it comes to again the robustness of the United States dollar as a world currency is unmatched. Like you might be able to find some trade that you can do with another country using your currencies or whatever, but you are not going to find that you can do world trade with your currency because you're going to find countries who just simply do not want anything other than US dollars. And the reason why they want them is because whoever they're buying stuff from wants US dollars. They don't want anything else. So the only other thing that even comes close to being able to be used as a world trade currency is going to be gold. I mean, Bitcoin could on a lesser extent, but seeing as how it's just like that is like such far off in its infancy that even considering it as part of a world trade at this point is just not really feasible. Gold, very feasible. It was once a world currency and it can be again. There's no reason it couldn't.
Yeah, because right now gold is making huge margins right now in Brazil, Russia, and other countries right now are seeing their currency basically melting to the price of gold right now. And we're sitting at right now in Canada around roughly $2,000 for an ounce of gold. And I think everyone I don't know, in my opinion, there's a lot of money being printed in the US. There's a lot of uncertainty. Lots of mispenditure. Not this presidential administration, but I think the one before. The last two presidential administrations, 3 or 4 actually, were very misspent a lot of money, and very poor with finances and drove up the debt. Lots of wars, right?
Yeah.
And
Yeah.
that led to uncertainty back and forth with the markets. Oil, we had that big oil boom. Remember 7-8 years ago, we had a massive oil boom selling at about $130 a barrel, and then the uncertainty faded, and things just kind of rippled around a bit. Now they're just either, I don't know what they're doing. I think they're going to start shaking the money markets, try and get more money. I don't know what they're going to do. What do you think?
Honestly, I kind of feel that I mean it's hard. It's really hard to kind of predict. But what I honestly feel is that these interest rates are going to drop. But I have a belief that things are going to be getting harder as far as an acquiring a loan. I think that things like this recent government-sponsored enterprise. What was it? It was like an incentive. No, it was an incentive. What was it? It was like a relief for the banks, right? So the banks want to loan out to riskier people, and they are regulated not to. The government-sponsored enterprise patch was the relief that says, okay, hey, this, even though you're regulated not to loan to these risky people, we're gonna give you an ability to do this, okay, so that you could loan to these riskier people. That patch is expired, right? So banks can't use that anymore. That means those risky people are going to be out of a loan, and well, less people who can take out a loan. What happens after that? I mean, you got to get more loans out there in order to expand the housing market. If you can't get more loans,
but we got a problem. A lot of banks don't have any liquidity.
That's right.
They don't have 2 nickels to rub together. Right.
And that's why you're seeing that, and that's true. And so that's why you're seeing them have the want to actually issue out mortgages cheaper than you would expect them to, right? They're trying to get out these loans so that they can get these loans, get you to sign the line. If you can sign the bottom line on a loan, you've created an instrument of debt that now has a price tag on it that they can sell. And the more of those they can package up together, the more of the commissions they'll make, the more profits they'll make on the premiums. They're not really interested in you and your house and your loan. They're interested in creating the instrument of debt. That's all they want, so that they can make their profits off the sale of that thing. That will eventually end. That's the speculation that's taking place, and that's the reason, that's one of the reasons why you're seeing housing go as expensive as it is because it's like they don't really have any real idea on how much they're paying for a house, considering that the interest rate is so cheap. You can pretty much charge anything you want for the house because the people really don't have to pay back anything to get to borrow the money for almost nothing.
But that's how they pump up assets. Asset values, and then people just jump on these markets and not realizing that they're paying 4 or 5 times the value of the house minus the interest rate at a cheaper rate. But if the rates were higher and the house was lower and they took it to term, they probably would have paid off the same thing.
That's right. That's right. That's very true. And a lot of people don't understand that. They just seem to think that if they can lower interest rates, then they can get, that's all they need, and so they can get them. They're not realizing that when they have like interest rates at 10%, they're looking at a $250,000 home. You drop the interest rates down to 4%. Now that house is up to $400,000 or $500,000. You don't get a better house.
Right.
Your house didn't improve none. You just get to pay a higher price for it. And yeah, it's true that even though that the interest rate is lower, what you're actually paying in the end may end up being the same because of the interest rates dropping or raising and causing the prices to drop. But, just like what you were saying. Yes.
Exactly. But the problem is then you have an asset that's already up there that has nowhere else to go up but down.
Yeah, that's true. And and that's the thing. Like, you see the interest rates drop and you see mortgage rates starting to come down, but is that really doing anything for the housing market? Is it really boosting anything? The people are so debt saturated that a little quarter point interest rate cut isn't going to help them any. You got to look at credit a lot like, alcohol or drugs or anything else that, if you're really, really drunk or high or something like that, and you're starting to come off of that high, you're going to get sick. There's no doubt about it. You're going to start feeling like hell. And then a little tiny bit isn't going to be enough. It isn't going to help. It might give you a little bit of relief. It might kind of think that you're doing better, but you're going to need another dose. You're going to need another hit in order to relieve that pain. Credit and drugs are very similar to each other. They have a very similar psychological effect.
Yeah, it brings you up. You feel good. You think you got the world by everything, and you feel like the guy Leonardo DiCaprio on the Titanic. I'm the king of the world.
King of the world, right, man?
So,
that's it.
Okay, so I'm very concerned. Someone sent me a very dangerous question.
Uh-oh.
On YouTube, very dangerous question, a financial one. It's,
oh boy.
Mike, I'm gonna throw in the towel. I'm debt free, and I got no debts. I'm thinking of racking up a bunch of credit cards and just collapsing with everyone else.
No, absolutely not.
Yeah.
Absolutely
I'm like,
not.
wow.
Do not do that, man. Do not do that. Okay, I had that kind of same thought a while back, and believe me, it is a long, painful road to dig your out of that. Okay, don't go and mess with your credit that way. If you are out of debt, man, just put your money into something that you believe in, man. Don't put it into credit. Don't go take out a bunch of credit cards and think that you're going to be able to keep this money and you're going to outride some system failure that is going to wipe everybody clean. If you believe that's going to happen, it's not. Okay. I mean, is it possible? Yeah, sure. I mean, that could happen, but you are taking one hell of a risky chance by doing something like that. You would be much better off just putting your money into gold and silver and Bitcoin and land and stuff like that.
Do you own any Bitcoin yourself?
I do own Bitcoin. Yeah, I don't own a lot of Bitcoin. I own a little bit of Bitcoin. I'm a little bit more excited about Bitcoin lately, only because the price is rising, and it gets everybody's attention. It gets a lot more people talking about it. But what I've always been excited about the innovations that come from Bitcoin, and I love the fact that this stuff is not going away, and the more government hates something, the more I am intrigued by it, the more I like to look at it, and so, yeah, I own Bitcoin. I mean, I don't trade Bitcoin. I don't really sell it. I do give up a little bit to my computer guy for some computer services, but he's the only one I really ever give any Bitcoin to. Yeah, and then really these cryptocurrencies, they are paving the way for the blockchain technology. That's really that's really what intrigues me. Not so much like the currency and getting rich. It's that blockchain technology that we're going to be able to use. This is going to revolutionize everything the way we live life, and really it's starting to take place and people don't even quite realize it yet. So yeah, the blockchain technology, I'm a firm believer in. I really like it. I can't wait to see more innovations coming from it. Cryptocurrencies, I like the idea. I like the idea of gold-backed cryptocurrencies, but then you're still putting your faith in a third party, which then kind of puts me back to the cryptocurrency again. Just out there, just a computer algorithm, and all you have is your private keys, you and your private keys, and that's it.
Cryptocurrency will be the way of the future. I think we're still pioneering through it right now.
Yeah.
We're still pioneers.
Still tiny. It's a tiny infancy thing, but it's It's beautiful. I mean, I love it. I love I think it's a beautiful thing. A lot of people are scared. Government. Being able to track every move and all that. Whatever. That's fine. I'm not. I don't. I don't fear that. I mean, if I did, I wouldn't carry my phone, right? I mean, this is listening and tracking you everywhere you go. So you got to get rid of your phone. Got to get rid of your credit cards. Got to get rid of everything. Carry cash. That who lives like that, right? I mean, you got to. Yeah, I don't like the fact that my privacy is questioned, as far as with these devices and everything around. But I'm not going to let that hold me back.
Well,
I'm not
that's
going to let it
this
back
is
on the
what Russia, this is what Russia, Russia and China are doing. They're creating sovereignty by buying gold.
Yeah,
I
that's
just
right.
thought of that.
Well,
It just came to mind. They're creating their own sovereignty
that's
by
right.
buying up gold. And they've been buying it for many years now, and they're buying tons of it.
That's
And
right.
why? And they're buying it because everyone's losing faith in the U.S. dollar, and that's scary, and
Hmm.
that's very scary.
Right. And I don't want to sound like I'm like approving of it, but I love the fact that Russia's just doing it in the face. Just like we're doing it, we're done with the dollar. We're taking on a bunch of gold. We're going to try and get other countries to use the gold standard. I mean, I'm down for that. See, I'm more interested in finding out a way that I can actually learn how to save something. There's nothing out there that I can save. I can't put my money towards anything that saves anything unless it's silver or gold or Bitcoin or cash. And you try, like what you just talked about. Bonds doesn't used to be a place that you could go and save money. You used to be able to put it in a saving account. Back in the early '80s, you could
Yeah,
actually have a savings. There's no such thing as a savings account. And I mean, I talk to millennials now, and I tell them, hey, how much do you have in savings? They're like, what the hell's a savings?
and that's and
It's like,
that's why
oh,
Russia and China are creating these reserve systems rather than this corrupt system where that could be easily cheated and manipulated. Right? Gold was cheated for about 6 years. I don't know if you remember that. After 2009, gold was cheated for about 6 years, and they kept it really low.
yeah.
And that's when Russia and China jumped in and started buying it at those low prices.
Yeah, I was there for like I started buying in on silver probably I would guess probably about 2009 2010. I started buying little pieces of silver and I rode that all the way. I thought, to be honest with you, when it hit 2011 and that silver was at $49 an ounce, I thought I was the smartest person in the world. I did. I thought, man, everybody around me is dumb. They should have listened to me. I'm the smartest person in the world. Anyway, when it landed all the way down at $14 an ounce, and I still had every single ounce that I had when I was at 2011, I thought, "Damn, I was stupid. I should have gotten rid of some. I should have. I should have sold.
You should have sold half, got your money back, and then
Right,
rebought it when it went back to 17 or $15.
right. And those are lessons. Those are lessons that you learn. That was me being a novice in the game. I'm still a novice in the game, really. I'm still learning all the time. I'm trying to figure this out. But I don't get like a lot of people got real excited watching silver move today over the last couple of days. They watched it go from 15, 16 up to 17 and they're just screaming, they're jumping up and down, they're real happy about that. And to me, I'm thinking, cool, but I'm still like, that isn't exciting to me yet. I'm not going to get excited again until we start hitting 35, 40, 50
Hold on,
dollars
silver.
again. And
I've been buying up a lot of silver miners in the last couple of short caps, small
good for
cap.
you, man.
Huh?
Good for you. I got a little bit of silver miners myself. That was you enjoy that?
Yeah, I'm buying a bunch of small caps in the last week, and small caps are where it's at. I don't want to deal with companies that have billions of dollars already in their caps, and they got nowhere to go but nowhere. They just float. But you get the small caps, 30-cent stocks, 40-cent stocks,
You got
huge
something
margin, huh?
You got something that can really move.
Yeah. Yeah, because
Yeah.
you got the movement there, right? So I've been looking at silver miners. My financial stock advisor has been talking me out of getting out of oil, because oil
Yeah.
right now, everyone's shorting oil. So even though I believe in my heart of hearts that oil is severely undervalued, I think it still has a lot more to go down, believe it or not.
Yeah.
So
Well, there would be a lot to say about that. I mean, if the scenario, I don't know if you follow that Brent Johnson's milkshake theory, but if the whole milkshake theory does play out, where the dollar becomes very strong, it's still the petrodollar, even though it's moving away. There's things that are happening. It's still that's the way it is right now. And if the dollar gets really strong, yeah, you can see oil go down. You can see the oil get very cheap comparatively to the dollar. Now, other currencies might end up having, be real expensive, but yeah, that's a very good possibility that we see, commodities, gold, oil, a lot of things go down in price comparatively, when the dollar starts strengthening up. If the world starts demanding it hard enough, that could be what happens.
I got a
I
question.
honestly think, yeah, go ahead.
It's from what somebody in the comments is asking. What kind of recommendation can you give to younger generations that are starting out, basically starting their first job? What do you recommend for them to do? Like when it comes to just getting started in anything, like what would you? Okay, let's pretend you're just getting out of high school. You got your first construction job. You're getting paid some decent money. You live with your parents. What do you do with the money? What's the best thing you could do with your money right now?
I'm not a financial advisor. I'm not anybody like that. But I guess if it was me, I would probably take a pretty like diversified approach towards it. I would take something that would kind of help me out during a currency collapse, like gold and silver. So I'd probably split it into something like three ways. Considering the environment right now, going towards something like bonds or CDs is not really like something I would recommend. Although if you put it into bonds and the interest rates drop, you could probably make a lot of money on bonds when you go to sell them later. That's a speculation trade. If you're going for like something that's going to be a long distance run or something like that, then probably stacking, precious metals, stacking up some cash, and then maybe even, getting into some of those stocks that you think are really going to last a long time. Because, really, if the system continues on, then you're going to really wish you had bought in some stocks if you were young, in your younger age. I guess to me, I would probably heavily get into cash for a while and time it, and then be vigilant on your timing. And when you see the markets go down a lot, get in and then start buying,
Bargain.
pretty regularly. Yeah.
Bargain.
And, if you're young, being young is like the most best time that you can ever have, because you have time on your side. You got interest rates that can compound. By the time you're in your 40s, 50s, you don't have that time anymore. You don't have the time to allow compounding interest to work for you. So, you can be like really young. If you can find something that gets you, 7, 8, 9, 10% interest, like that would be really killer. But if you could find something that even does like 6, 7, 8% interest on a regular basis, and you put, $100, $200, $300 a month towards that, you can really be a dumbass your whole life and still come out doing really well in the end, as long as you just make sure you put that money away every month and go party the rest. You can just make sure you do that first before anything else. And then in the end, you'll probably be okay. You'll probably do just fine. But that's kind of what I would say is that, as a young person, you got to think you got time on your side. And if you can get anything that can compound interest, grow, that's where you should go. And and you got to be vigilant on your findings. You got to look out there and see what it is.
Because it's tough. You're looking at right now, real estate's overpriced. You're looking at the markets right now are uncertain. You're looking at, right now, being young. Yes, you do have time on your side, but there's so much to lose too. In the meantime, if you're not careful, right?
And that's right. There's a lot to lose, and it would be. It's really heartbreaking to save a lot and then watch it. Like, if you save up, $50,000, $60,000, and all of a sudden, over the course of a month or two, it's down at $30,000, and you're a young person seeing that happen. If you didn't have a lot growing up and you had saved that is like heartbreak. That would tear you up, But that's where you got to grow tough. That's where the pain is. And if you can fight through that stuff, that's when you think, okay, now I got to add more to my portfolio, because once I get it back, it's going to be that better of a position. You got to, you got to be able to fight through that stuff. The older you get, the less opportunities you have to be able to deal with that kind of pain. If somebody who's 80 years old dealing with a 50, 60% market drop right now is going to be in very, very, very precarious situation.
Yeah. I don't think, in my opinion, don't take my advice, guys. Do your own research. That's
absolutely
key.
sure.
In my opinion, I think gold still has a lot of delta to go.
Yeah.
I think there's a lot of delta in gold left. So I think there's a lot of movement. I don't think gold was nowhere near its potential right now. So it's going to be very exciting to see. I'm kind of more on the side of silver, because silver is the poor man's gold, I guess, if you want to say that, and it has a lot of potential and volatility, and there's a lot of liquidity in silver right now because it's severely undervalued. So if you think gold's undervalued, silver should be sitting at about $33 an ounce right now. If gold is at pushing 1,500, silver should be at a comfortable $33 to $35 US range right now. That's what it should be, realistically.
Yeah. And you see, like, every time there's like a little kind of hiccup in the market going on, gold is rallying now. People are paying attention. They know, like, there's this, like, oh, they get feared and they're like, whoa, there ain't no place to go. Got to go to gold. You know, if there's no place else out there, you always have gold, you know, and even though it doesn't carry an interest rate, it doesn't carry a negative interest rate, you know. And so, you know, it may just sit there, but at least it's something that is like, you know, it's something that it will always be world recognized, world used. It's not like, you know, just something that is just a trendy fad or something like that. It's not just like a temporary currency. It's not a fix. It's a real item. It's something that is in, you know, it's almost part of us. You know what I'm saying? It is part of us.
I got $5.49 Canadian sent to me by Papa Peace view count. I'm just paying attention to what you're saying here. And
what are you up to? About 64 viewers, it looks like.
Yeah, it jumps up and down. What usually happens lately with YouTube, I noticed that when I get to a certain amount of viewers, it just cuts off my stream and it starts over.
Really?
It's been doing that all the time on Mike in the Night. It's been doing it on a lot of shows. And my people commenting here will tell you that it's happened many times. And a lot of people are telling me they're not getting notifications for the show ever. So people watching it on replay, and they're I'm not sure why. I guess because, you know, we're just out kind of creating awareness, talking to people, and you know, just making a presence out there, that there's just like you said in your channel, when you go to your channel, about you, just an everyday day-to-day work guy, from the eyes of a work guy. You right? What'd you say?
Yeah.
From the eyes of a working class.
Yeah.
On your channel, if you go to About, it says that you're just from the viewing from the Three Right Guys Gaming Podcast just sent me $14.88. That should be enough money to get me to Portland, Oregon. Yeah, I got to come down and visit you, or you got to come up and visit me. You got a passport?
I don't, but I really should get one.
Get a passport, and then if you want to come up, I'm not that far from you, to be honest. I'm like about a 6-hour drive from you.
Oh, really? Yeah, man. That'd be great. It would be nice to get the family, get them away from town for a little bit.
Oh, yeah. I got lots of land. You could just park an RV, or you could just, yeah, there's lots of options. I have room here, too, anyway. It doesn't matter.
Oh, that's it.
So, you know, I'm just really shocked that we didn't leave these markets and the housing markets, and we didn't leave everything on autopilot. That's what scares me. Why didn't we leave things on autopilot? Why do we have to get the feds involved? Why do we have to get the banking involved? Why do we have policymakers involved? Why do we have to get all this crap involved and then create even more layers of government to govern this crap? They should have left everything on autopilot, and now everything is defaulting. All countries are defaulting on their own debt, and it's...
Yeah.
No one is graduating from university or college with a degree in how to survive anymore. They're learning the weirdest stuff. People stuck in student loan debt, and you know, bonds are imploding. If that makes sense, and capitalism is vaporizing.
Like vortex, you know, it's like sucking people into it as they drive for like yields, and as they reach up there and grab the yields, they're just pulling the yields down into this vortex, you know, of going negative. And I don't know. I mean, I just look at that bond market and I just shake my head. It's just like, yeah, this cannot possibly go on forever, you know.
and basically, like, and I said, capitalism is vaporizing, and policies are not clear. And quantitative tightening and all kinds of crap that's happening. Oh, I want to thank Lord Humongous for donating $2 US.
Hey, right
that
on,
should
Lord
get me to
Humongous.
Las Vegas now.
You're a good guy, man.
And I'm just kind of throwing things out there. I'm just, why didn't they just leave everything on autopilot? There would have been a correction a long time ago. They wouldn't have to use our money to bail out the big guys, and we would have been now 10 years later now from the 10-year anniversary of the big crash, 11-year anniversary now. We would be flourishing right now. We would be thriving right now. What do you think?
Well, I kind of think, so, there must be something going on in the background there, because, like, this. I don't know if you watched the videos that I talked about Judy Shelton. Now this is going to be one of the hires that Trump wants for the administration over there, from the administration going into the Fed. And this girl, like, if you go back and you read some of Judy Shelton's stuff and you listen to her interviews, this lady is incredibly, incredibly intelligent when it comes to currencies. This lady really knows, like, what went down in Russia during the Soviet collapse and stuff. She understands currency really well. And this is one of the hardcore gold standard people out there. And she's pushing for zero interest rates coming out of the Federal Reserve.
Right.
It's something like, intuitively, it would seem completely opposite of what you would think. It just doesn't seem like it's right. So in my mind, I'm thinking, what are they doing? Are they attempting to really collapse the currency so they can institute this gold standard? I mean, is that the whole point of these negative interest rates and going into negative yields, is so that the people can actually find something that will have a positive, like gold would, or something that doesn't have like a negative yield? It almost makes me wonder if they are attempting to crash the system on purpose, going into these negative rates. It seems like that might be one of the cases.
Well, the thing is, hold on, I got to pop up here. I got a $1,600 prize.
What's that mean?
No, I don't know. It's just a pop-up. The thing is that we have massive inflation in asset prices, right?
And
now,
massive asset inflation.
household net worth is roughly, 500% of GDP? And it's never been the average. And it used to be 70% of the total market of the cap of the GDP, right? Wow. And people are getting themselves way in over their heads. And I'm very, very scared because we keep throwing whatever we have in our toolbox to keep these people more indebted instead of letting them go solvent and fixing the problem that you know what I'm saying? And it goes back to what you just said right now, right? And yes, they're gonna make that announcement, like you said, that they're looking to go to 0%. And why would you go to 0% if we're doing good? And the job market, last quarter job market, they added 175,000 jobs in the United States. Why the heck would they want to lower rates when our job markets look good? We have a slightly strong dollar. Yeah. Why do they keep pushing this toxic financing on us, or toxic products that they're offering us that's going to enslave us even further? You know what I'm saying? It's like a controlled demolition.
Yeah, it's somewhat like that. Now, I mean, really, if interest rates go up, I mean, the debt that the U.S. has and how much it would just be like they can't handle interest rate risings. I mean, the U.S. itself couldn't. Now, if you start taking in the ideas of like MMT and modern monetary theories, like, where deficits just don't matter and you can print up as much money as you want, we might get to sample some of that. They might actually get to try and use some of this modern monetary theory coming up here in the future. They have a lot of options as far as now. I'm not saying these things will work. I mean, they might, on the surface, might work for a while. They might, like, everybody might say, hey, look how great everything is. We went 10 years with this modern monetary theory and everything's still going well. But essentially, everything will collapse on that, because you just can't go on through life saying that deficits just don't matter. It's like saying that I can always get another credit card. I can always, just roll my debt into new debt, thinking that, that there will never be a time where you can't do that. That's very ill thinking. I mean, one of the funniest things I had ever seen is when Greenspan was being interviewed. And I don't know if you've seen Greenspan's interviews lately, but he's really old and he's kind of hard. He slurs his, to listen to, because he slurs his words. But they asked him, they said, hey, Kudlow doesn't think that he'll ever see interest rates rise in his lifetime. And Greenspan chuckled a little. He says, wait a minute, what was that? And she says, yeah, Kudlow says that we won't see interest rates rise in our lifetime. And he says, yeah, I wouldn't hold my breath on that one, as he laughs a little harder. See, I mean, even he in his old age knows that at some point these interest rates will start to go up, and
They,
there is going to be
but
some
that's
hell.
that's what we've been hoping for the last 13 quarters now. We've been hoping for interest rates to get up to around 5 to 5.9 to 6.5, healthy percentage wise. In a normal housing market, in a normal correct market, 5% shouldn't break the bank for most people. You know what I'm saying? 5% should be the healthy normal, because then this way your banks will start paying you again. Remember ING Direct? Save your money, 5%, payback, 4.5%. People are looking at me like, who cares about 4.5%? You have $1 million in the bank at 4.5%. That's $45,000 a year in interest.
Right?
That's
I
when
mean,
that's when your money made you money. Now your money's worthless right now. But okay, now my question. This is a very important question. I need you to answer this as honestly as possible. Okay?
I'll do
Do
my
you
best.
see a currency collapse? And if you do see a currency collapse in the United States, do you see gas going from $5 to $12, $13 a gallon? Like, do you start seeing that as?
Yeah. Now, where do you, I mean? At what point? I mean, which way is it a currency collapse that's gonna like where they just print as much money and just kind of print into oblivion, where all of a sudden the currency doesn't have any kind of value at all, or is it going to
Well,
be a
because we're
liquidity
hitting a wall of
crisis?
stagflation, right?
What's that?
We're in stagnation mode right now.
Oh,
So
yeah,
we're not.
essentially, right.
Yeah, and it's never been seen before in human history at where we're at right now. And now with the Federal Reserve going to 0% interest rates, they're not putting in the measures that are going to protect us. So then
That's
you're
right.
going to have a bit of temporary inflation here and there. Then inflation goes up 2%. I mean, then they start controlling it with something else. You know how they always throw tools at it? They throw everything
Absolutely.
they have. You know what I'm saying?
Now,
Can you
kind
see a
of,
currency collapse? Can you see the
I,
currency?
I can, and but kind of think about things like, I mean, you see currency collapses that have happened in like, you take like history, like, Zimbabwe or, Argentina and Venezuela and, the Weimar Republic from back in the day. These were central banks doing this that were essentially part of the government. Our central bank is independent. Okay. So if you think about it, if you have an independent Fed there that's making decisions independently, would they make decisions that would really undo themselves? Like, are they going to make a decision that destroys themselves?
Hmm.
I mean, honestly, or is it going to be more of like a self-preservation? Because if they print into oblivion, then the Federal Reserve becomes useless and no point to it anymore.
Right.
Is that what the Federal Reserve, independently thinking, would do? Is self-destroy, self-destruct themselves? I mean, is it possible? Yeah. Do they have like all this pressure coming down? Are they a branch of the government? Are they controlled by some elitist group? Who knows? I'm just trying to think of like logically thinking. You got a group of people who are independently thinking, and are they going to make decisions that undoes themselves, right? That says like basically I'm going to shoot myself in the foot and then I won't have a job anymore. Or are they going to attempt to make decisions that preserves the banking system, their job, their way of life, their
But
control?
but
This
they're not
is
backing it. But they're not backing anything with it, right?
Well,
So
that's not necessarily
economically,
true. They back it with the bonds and the mortgage-backed securities. So there's like like they have a balance sheet. I'm not saying that it's like worth anything. I'm just saying that there is something there that they are using. I mean, they have these bonds and these mortgage-backed securiries. Whether those things are actually legitimately have any value to them or not, it is something that they have there. I mean, there was a time back in the day, even like, in the 30s, where most of the gold that they had would have covered all the Federal Reserve notes that they had in existence at the time. And they could have done it again back in the 70s. And there's certain times in history that they could have backed all the Federal Reserve notes in existence with the gold that they had on hand. Does that happen? No. All right. It's not something that the Federal Reserve has in mind, because they're about expanding and contracting the money supply. They're not
that's
about
correct.
preserving gold as part of the monetary system. That's not in them. So they do have something that they want to put on their balance sheet. They're not just like willy-nilly printing up money. They're trying to find stuff to buy that is somewhat legitimate.
To give it some backing or some sort of substance.
Exactly,
Because the
right.
so-called banana republics that you mentioned earlier, minus Argentina, Argentina had more. A lot back in that time when that Argentinian crash. I was just a kid. I think it was in 92, 93. 91.
There was, and then they're not, even right now they're going through a pretty hyperinflation. Go look at the gold price to Argentina. Oh my
Oof,
goodness,
and Brazil
it's
too with the
off the
real.
charts,
But what I'm trying to say is that I remember that because there was a lot of people with a lot of cash in Argentina. I mean, Argentina is a first world country. It's very modernized. I've been there. Beautiful highways, airports, soccer stadiums. I mean, it's got a very strong backing to it. Like, I mean,
Well, if there was a time like in Argentina, if you had 250,000 Argentine dollars, like if you had 250,000 Argentine, you were doing very well, right? I mean, you were doing pretty good. Now, I couldn't tell you what the exact conversion ratio is to the United States dollar, but it was pretty decent. Now, 250 Argentine dollars doesn't do anything for it. You see, it's like that's the currency collapse that you're kind of referring to is happening. Is like your savings account all of a sudden doesn't have anything to it. You sat there 2 years ago wondering, man, I have everything I need. So all of a sudden, I can't buy anything with what I have. That is very real, and it takes place a lot. And it's been taking place a lot more here over the last few years, and you can see the weaker countries getting hit first. Yeah.
yeah, because the thing is, we're hitting stagflation because the economy is shrinking.
That's right. Yeah.
And when the economy shrinks, prices start going up, and because the currency, in my opinion, is collapsing, and the consumer rate goes down. Hold on, someone sent me an attachment here. Hold on, let me close that. So then consumer confidence goes down, and consumer activity goes down, and that starts to hit the middle class even further, right? So
Yeah.
I'm just really concerned on where things are headed right now because there's just so many ways through the maze.
That's right.
But how do you get out free and clear? How do you get out unscathed? How do you get out? Because this economic activity is shrinking a lot of things in a bad way, and we're gonna go back to the bear market in the 1980s. I don't know if you remember that, and it kicked off with the bull market, and it created that inflation. And then it went back down. Then things went back up during the Reaganomics industry, where everyone was in high heaven with everything, and there's little risk, and everyone was investing. They were all getting returns back on their stock during the Reaganomics time. And then after 10, 15 years, things try to normalize themselves. But instead of normalizing them, we keep throwing things at it to try and make it better. But I don't know if you remember when China's stock market peaked in 2007. And Japan, I think at that time, was going into negative interest rates.
Yeah, that's right.
So in Japan, it's still there today. I don't know, 20 years later, it's still in that stagnation, and economy's not growing, but it's still somewhat shrinking. You know what I'm saying? And I don't know. Talk for a bit. I'm just losing my mind here.
No, you're on it. I mean, the frustration level can get out there. I mean, it's crazy that you think about like cheaper products coming into the United States would almost seem like that would be a good thing. Like if we could get things really cheap, that would just be awesome for this country because we'd be able to have all this other money that we could buy all these other good products with, right? But the problem is that we are not like a manufacturing-based country. We're a consumer-based. And if consumer prices start to drop, that is very detrimental to us. Most stores cut a very thin margin. And so when you sell a TV, and I've talked about this on my channel before, but if you're like Walmart and you have a TV and you sell that TV for $100, right? The margin that you make on it is very thin. So if that product comes into the United States at a cheaper price, you have to lower your price and make that margin, right? That very thin margin, because you're in competition with everybody else who's getting cheap TVs too. So now instead of selling a TV for $100, you sell it for $89. Now you have to sell that much more TVs in order to get the revenue in order to cover your overhead. See, the employees get paid the same, the electricity costs the same, the rent costs the same, but now the product that you're selling is getting cheaper, and you don't make as much money selling that product. So you have to sell that many more products in order to make up that revenue during a time when people are buying less products.
Like I'd rather sell 3 TVs for $10,000 a pop when they used to be really good TVs than sell 30 TVs for $180 a pop, and make less margin.
And this is where the consumer has to take a conscious effort to says, I am going to go and try right here. And the more people took that kind of initiative and says, no, I'm not buying the cheap product 30 times. I'm going to buy the greatest product just one time. And then we can still make those great products. That's where the American way kind of can boost the manufacturing. You're not going to do it with like weakening your currency and expect the rest of the world to buy up your products. They're just going to weaken their currency in lockstep, and it's going to make your efforts futile. It's like, I just laugh at that argument. Says if we weaken our currency, we can export more. No, the rest of the world, you're weakening your currency to their currencies. They're just going to weaken their currencies in hopes
Well, that's what
that
China's doing. They're purposely
that's exactly what
they're
doing.
weaponizing their currency.
Yeah. And every time that currency gets weak, we hit them with another tariff to make sure that those products stay elevated in the United States. So we can't take in these cheap Chinese products. We can't do it, or else, the stores don't make as much money.
I don't know. You don't remember this, and I don't remember this because we weren't even born then. But back at the turn of the century, 1 out of 3 things on the planet was made in the United States.
Yeah, that's right. We made everything.
Yeah,
we
1 out of 3 things on the planet.
Yeah. I mean, that was one of the reasons why we were such a prosperous nation, is that when you make the world's stuff, when they're buying everything from you, it was one of the reasons why we did so well during the wars, is that, most of the time wars were being fought outside of the United States. America wasn't really involved in these wars. As these people were fighting, they needed food. They weren't farming themselves. They were building tanks and shooting people. We made food and sent it over there and made a ton of money from the farm equipment, from all the stuff that goes into the transportation of agriculture. It was like a great time for America. War is great when you're exporting all your stuff to them, and that's what we've lived on. I mean, we did a great job of that for a long time.
And that created the boomer era at the end of World War II. The boomer generation started popping out children, and basically, put us where we are today, right? And war is money. You're correct, but
it was the same thing that destroyed us essentially too, because when the war ended, all of a sudden there was no more buying of the food, and our farmers started to hey man, I took out, because you think about it, it's the same thing happened back then that happened now. When you're a farmer and you're farming, and all of a sudden there's a big demand for your product, and you're pumping out a lot, and you're like, man, I got a lot of money going on. I'm going to buy me another tractor. I'm going to buy some more land. I'm going to build another farm. And then the neighbor next door says, man, that dude's doing really good in his farming. I'm going to go get a loan, and I'm going to build me a farm. Mm-hmm. All right? And then you go and build this farm, and everything's out on interest. And then all of a sudden, man, that product doesn't sell, and you can't make your interest payments. And now they come and start foreclosing on your farm. And,
yep. Okay, important question.
This happens over and over again.
Okay, important housing question.
Yeah.
Slow down in the construction industry. What do you see happening?
One of the, I know, I'm sure you probably see me talk about it on my channel, but one of the things that I like to follow is 2x4s and half-inch CDX is a good indicator of where we are in the new construction market. These are the two main base components in just about every single building that is made of wood. They're going to use 2x4s and half-inch CDX. And with these two components, since last year, they have dropped dramatically in price. Now, all the rest of the parts and pieces that go into building a house, all the roofing and drywall and the doors and the fixtures and everything else, that stuff stayed elevated and has gone up in price. But the main component, the actual 2x4s and half-inch CDX, that stuff is dropping. And I'm sure you've probably, heard about it inside of, all the mills that are shutting down in British Columbia. Right. It was an intense amount. I mean, there was a lot of these poor guys. This is all they have in those areas. Like, you go up to, 100 Mile or something like that? Yeah. I mean, that's it. And they got trees and mills, and that's it. That's what they do up there, right? It's like that's their whole life. And they're shutting these mills down, and there's less, lumber being produced up there in Canada. And I kind of wondered, I was like, well, what's going on here? How come all of a sudden this big drop in lumber? What's taking place? And it has to do with this world trade. It was crazy. China was buying a bunch of lumber and timber from the United States, and we were buying a bunch from Canada. When China quit buying from us, we quit buying from Canada. And, strong dollar, everything else, and the demand for that lumber has just fallen out. Prices per future went from $650 down to $300 per thousand. So the demand for these two main components has fallen dramatically. Now, just recently here in my area, just locally, we've had a plywood mill shut down. It had 90 employees that ran this plywood mill. They produced a lot of plywood out of there. Now, this plywood mill shut down during the middle of the construction season. Mm-hmm. Okay, so it wasn't just Canada and this tariff and the world trade. This is happening here in the United States as well. These mills are starting to shut down here as well. And it's the plywood mill, so it's like a secondary production, right? They take a wood product and then they make something out of it. This manufacturing component is going away. And it's it's signs to me that there is definitely a slowdown taking place, or else these mills wouldn't be shutting down.
Right, definitely.
Oh,
Especially
well,
with China not buying up and China trying to strong arm. China will not win in a trade war with the United States. That's the thing. And
I
that's
don't
what
think so.
they can't. And I don't know. They're doing the same thing that the Feds are doing and the banks. They're throwing everything in their arsenal that they think could work. And they're with their economists. They're looking at what they could throw at America to make it, to make them, I guess, surrender to this trade war or give in. It's just getting worse.
Yeah. The only thing that I really see having going for China is that their people kind of their people understand gold and its value. And like, you can go down to their banks downtown and buy gold over the counter. Like, there's gold is encouraged. They have signs up that say, "Hey, get bullion," kind of thing. They understand what it is to have gold inside of your possession. You could go to 1 out of 100 Americans, and they couldn't even tell you where to even find a piece of gold, let alone if they have any. If they do, it's in jewelry, or it was a gift or something that somebody else gave them. Hardly anybody understands the nature of gold and
the intrinsic value.
The intrinsic value. That's it. Yes, sir.
Remember Mark Dice was standing outside of a 7-Eleven. He was offering people walking by a 10-ounce bar of silver for their latte, and everyone said no, or the chocolate bar they were eating.
Yeah, and I so wish I knew where that was taking place. God, I wish nobody asked me stuff like that.
Yeah.
Nobody asked me. But I know what's funny, but this is what's interesting. So my whole family, we work retail, right? We all like stand behind a cash register and we take money over till, okay. And what's funny is that my wife comes home the other day and she, holds out her hand and she drops 2 silver eagles in my hand. Somebody had spent those silver eagles as dollars. They had no clue of what they had. They probably bought a beer with them or something like that. They had 2 of them. It said $1 on it. It said United States of America. They went down to the store and spent them as $2. So, yeah, if that still continues today, that people do not recognize the value of gold and silver and what it could be as far as a monetary system, I think we're still a long ways off before something like that will
Yeah,
happen.
definitely.
It could happen quickly, once that trend changes. But, yeah, I mean, when I get $30 worth of silver for $2,
Mm-hmm. Yeah, and there's a lot of junk silver out there. If you took the time to go through some of those, change bags and change drawers and change jars, you find a lot of good junk silver.
It does come up. I do have to say it's few and far between, and now that a few of the guys there that I work with, they recognize silver. It's even harder to try and find them now because they're searching just as much as I am. So yeah, every time we crack open a roll of quarters, every one of us is looking for gold or looking for silver coins.
Yeah. Yeah.
And it's just. It's something you gotta keep an eye out for. I did a video a while back where I talked about it. If you put the word out there enough, if you just let enough people know, they start searching through their change just because they remember you talking about it. And they're like, wow, look at that. There's an old coin there. And then they'll start bringing you silver. Like, literally, if you talk about it, give it a good attitude, people will search for it for you and bring them to you. Like, here, man, you can have this.
Yeah.
It happens. So yeah, be positive about it, and just spread the word as much as you can. And yeah, you can find other people like, oh yeah, man, I got some silver spoons or something I've been holding on to. You can have them, or I'll sell them, whatever.
Spoon collection.
My buddy has like 50 silver spoons. It is awesome. He pulls those things out, and it's just like looking at all that silver laying on the table. It's pretty cool.
All right, Uneducated Economist. We're approaching our hour together.
Right on,
I
man.
want to thank you for taking an hour of your time to come on the show. And guys, don't forget to subscribe to his channel, Uneducated Economist. I'll leave a link in the comments here right now, a live link after we get off the after we end our transmission here.
Awesome.
Here it is. Here's his channel, guys. If you guys want to, here he is talking about mortgages go negative. I'm going to leave a link in the comments section. Hopefully, you get up to couple of 100 subs tonight. Let me paste this
that would be great, man. Yeah, thank you very much. Thank you for promoting my channel, man. Nope. Really appreciate it. And yeah, man, I'm gonna stick it out and watch the rest of your show tonight. So
all right, thank you. God bless, and stay strong, okay, buddy?
Yeah, you too, man. Thanks again, man.
Thanks.
Thank you.
Okay, bye.
Bye.
So people, that was the Uneducated Economist, and on the show with a lot of good information, lots of good points of views. Let's go back to his channel here. What did he say on his About channel? About. Said something. I mentioned it earlier. Insight to what I see from working class point of view. That is strong. He's almost at 500,000 views, and that's really good. He's hopefully going to get the 4,000 subs real soon. And another person I need to get on the show, it's been a while, is Formafist. I want to see how he's doing. I miss him. It's been a while. I miss Formafist. Really want to see what he's up to. I'll try and get him on the show next week. Steve Shiva is there. Woohoo! Caught the live. Nice. Hi, everyone. Owen, gotta sell my body for some extra money. Ha ha ha. And there's Lord Humunga saying, thank you, uneducated economist. Woo! All right, trends in the housing market tonight. All right, uneducated economist on the show. And everything looking good. Markets are headed in the direction that we expect them to be heading with the way things are going right now. It looks like oil's going down. It looks like silver and gold's going up. All right, guys, this is the debt to income calculator, guys. I really, 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 really need you guys. Oh, we got Leaf here calling in. Yo, what's up, dog?
So I just want to say that all the economic indicators are saying we're in the recession as of last week when the Fed cut interest rates. There was a day lag, and then they all started showing up. You have the inverted bond yield. You have the lumber's down.
Yeah.
You have the American U.S. home sales is at a 16-month consecutive drop.
Right.
You also have the shipping index is down.
Yes.
Those are the cargo ships. Then you also have the freight is down, which those are the big semi trucks. And then you also have gold pumping. You have silver pumping. You also have Bitcoin pumping.
Can I ask you something, Leaf?
What's up?
Okay, do you see silver catching up a bit or what? What's happening with silver? Do you see it catching up?
Well, the thing with silver is it always kind of like, I feel like it usually lags a bit. Usually it pumps harder on a percentage, and it also drops harder on a percentage. It's more volatile, right?
Right.
But, a lot has changed over the years. It could be people, in some sense, a lot of people view it as an industrial metal now, right? Like, if you look at the market cap of silver, it's not that large. Like, a couple of billionaires can pump it if they wanted to, like a shitcoin.
Right.
I own the metal. I like the metal. It's very shiny. It's fun to play with. But I wouldn't stake my whole future on it, or I would bet. I would own some of it. But you get what I mean, though, right?
Yeah, I understand. You wouldn't put all your eggs in the basket.
Hell no. We have the S&P 500 that's been tanking. The plunge protection team brought it back up today, but I don't think that's going to be... that's going to stay for long. We got the Dow Jones that went down as well.
Yeah, the Dow Jones is down 22 points today. Canadian dollar sitting at 75 cents. Crude oil 52.64. Crude oil I think is going to take a dip down to 40. Bitcoin sitting at about 20 large. 15,000.
12 large.
15,623 Canadian.
Oh, Canadian, yeah,
yep.
Canadian.
Gold futures $1,509, and the Russell 2000, which is a very important index to follow.
I'm not aware of it. You'll have to send it me on Skype.
The Russell 2000 is one of the very important market caps to watch because Russell 2000 only deals with billion-dollar companies, right?
Mm-hmm.
And when you see them start taking a bit of a dip or a tick, you got to watch out for the Russell 2000. A lot of people don't watch it. A lot of people are watching the 10-year bond, the dollar, oil. The Russell 2000 is a very important market to look at.
There's also two more indicators that I didn't mention. There's the retail apocalypse, and which is a big one when we live in a service-based economy. That's something people don't put two and together. Is most of the jobs we have here is cashier, clerks, and shit like that, right? That's the majority of the economy.
Yeah, service. We're service. We don't produce anything.
Yeah, service. So retail apocalypse has been going down all year, but here's another thing: corporate earnings are down.
Yes. But jobs are up. Job reports are up 175,000. Hold on a sec. I want to thank Pashka for $2 for coffee for Mike. Woo! Okay, continue.
Yeah, as soon as you got the donation, the super chats, you got them rolling in now. That's good.
Yeah, that's good.
What else we got? Okay, so there's also a flashpoint that might happen. I'm not sure if it will, but it's a give or take case. So right now the PLA they've been staging right on the border of Hong Kong. I'm not sure if you're aware, and they have all these protests going on. So what could happen is the PLA might just flat out invade and annex Hong Kong, and then just put it under the mainland rule, and then you would do away with the two-party or same country, two different system paradigm.
Yeah.
And what if that did happen? What I believe would occur is the price of Bitcoin is probably going to shoot up because people are going to panic in Hong Kong. I don't think the gold and silver price would be affected as much because you can't get the shit out of the country in China. But Bitcoin's another case, right?
Okay, hold on a sec. I have somebody that's trying to get into Hong Kong. Their flight, one of our channel viewers is trying to get into Hong Kong. Tried to get in a few days ago, couldn't get in. They postponed his flight for 3 days. He's supposed to be leaving tomorrow for Hong Kong. Hopefully he'll arrive and give us an insight on what's happening on the ground.
Well, here's my question: is why are they postponing flights?
I don't know. His flight was postponed twice, so he's gonna try and his flight was postponed for tomorrow into Hong Kong.
Well, if they're postponing flights and shit, there's probably a good chance that the military is gonna do what I just said. I'm not saying that 100% through with my little snowball, but it seems to be that they got them preparing for riot squads. But if the PLA invades Hong Kong, that would be the end of Hong Kong's little fake democracy. Is what's left. That's basically the signaling point of the fall of the Pearl of the East. So that's a big thing. And then not a lot of people are thinking the U.S. dollar, they're going to start playing currency wars like China. So they're going to start devaluing the American U.S. dollar and shit just to combat China's devaluing of the dollar, which China's already done that. Their dollar is now weaker than it's ever been since 2008 because they have to make up some way with the tariffs.
Well, they have to weaponize their currency, right?
Well, that's what they're doing. And I don't see this trade war getting resolved anytime soon. But in the meantime, I can see there's a lot of economic damage going on. I just basically listed off a bunch of it. And they're probably going to make it into a political boogeyman. But here's the thing: it's a trade war now and all that jazz. What happens when the politics outweigh the economics? Because Winnie the Pooh, Xi Jinping. Eventually, the Americans, if Trump keeps talking shit, eventually he has to keep face. So it'll get to a point where they can't even politically reconcile to deal with the economics of it because both sides have become too heated against each other. And here's one thing: if the American economy goes to shit and implodes, the world economy is going to implode. But another thing is, if China implodes, there's going to be a lot of damage as well. And the Chinese housing bubble is insane. They've got these ghost cities and everything as well, right?
The thing is, the Chinese are in the same boat as a lot of other countries. They don't have enough liquidity in their country. They have no liquidity whatsoever to hedge against the crash like they have coming towards them.
All of these economies are Mickey Mouse, paper, tiger, the emperor has
Banana
no clothes.
Banana republics, because that's why they have currency collapse. That's why the currency collapse, right? And their economy starts shrinking, and then it goes back to Japan 101.
Yeah, but Japan can get away with it when the world was still normal.
Yes, but not when everyone's going
exactly.
back.
Yeah, because you can't parasite and leech off of others when everyone's doing the same trick. And here's the thing: if the U.S. starts doing what everyone else has already been doing for a while, who are you going to parasite off of left? That's the last parasite for everyone to blood leech off of. And when they start doing the same thing and start dropping interest rates and negative bond yields and all this other crazy horse shit, there ain't no one. There's no legit economy left.
No, there is no legit economy left to siphon off. Okay, Leaf, I'm gonna let you go. I'm gonna get into some housing news here real quick. Come on, Mike in the Night this Saturday. Message me later in the chat what you want to do for a topic. What you think is a good idea for this Mike in the Night.
Let's try and get the Asian capitalists on the show if I go hop in their Discord some of these days, because I think that'd be really good. That'd be a lot of fun, and they can probably talk about the culture of things mixed in with a bit of the economics of things.
Yeah. Okay. All right. Well, keep me on the pulse there, and let me know what's going on. Okay.
Yeah, I'll see what I can do.
Thanks,
Ciao,
Leaf.
buddy.
God bless you. That's our man Leaf from Ontario. Anyways, okay guys, let me just get over some news here. Better dwelling, Canadian borrowing rates are officially below last year's levels. Canadian lenders scrambling to reboot slowing credit growth, but lowering rates. Bank of Canada numbers show that household effective interest rates made a decline. So people are getting less and less money. Why? Because they don't qualify for much more. Vancouver real estate sales rise, but fall short of typical price slide. Let's look at the graph here so you guys can see what they mean by it. And if you look at the graph, and benchmark price is still going down. And there's the 12-month change, Greater Vancouver Composite benchmark price change. It's still going down. And sales versus listings. Woo! Look at the listings versus sales. Sure, if you have a million. Okay, think of it like this. I'm a guy in a flea market. I got my one table. I don't make any sales. Damn. But I'm the guy in the flea market and I have 300 tables. I make a lot more sales and I have a better chance to sell. When you have this much on the market, holy crap. You're going to sell stuff, but it's still pretty low. It's nowhere near the big numbers they had in 17, 16, and 15. Greater Vancouver listings hit 5-year high for July, but sales rising faster than inventory led to an increase in the sales to active listings ratio. The SALR hit 18% in July, up 17.1% during the same month last year. The market is considered balanced in this range when prices are just right for demand. It's always best to get a secondary or maybe a third or fourth or fifth confirmation in a fast market. So that's where we are in right now. We played the blame game. We played the lower interest rates. Now we are in a fast market right now, and I think we're in a dead cat bounce when it comes to where we're at right now. Why buy a home in this uncertain market? Portfolio manager advises. After enduring bidding wars and skyrocketing home prices, would-be home buyers are facing a relatively new dilemma. Jump in and take advantage of the lower national average prices, or trend cautiously to avoid making costly mistake. While current conditions may be too hard to resist, positive homeowners should be in no hurry to make the largest purchase of their lives if they're nervous about a coming economic slowdown and eventually a recession, says the author of a book forecasting the housing crash in Canada that takes it decidedly contrarian view of the real estate industry. I would say wait, says Hillard Macbeth, portfolio manager in Richardson GMP in Edmonton and author of the recently updated When the Bubble Bursts, Surviving the Canadian Real Estate Crash. Let's move on. RBC, Toronto and Vancouver real estate construction significantly outside of normals. So this is from a few days ago. And of course, construction is dwindling right now. Affordability is out the window. And rental market balance is out the window. There's lots happening right now. Canada is building up an unusually high number of homes. Of course, because we kept playing the supply versus demand. That's all we kept playing. Supply versus demand. We don't have enough supply to feed the demand. Now we have an oversupply on the market, people. If you guys have been paying attention to what's been going on, we have an oversupply on the market right now. Silicon Valley real estate market crashes following astronomical rise. Silicon Valley real estate market appears to be crashing in 2019. Home prices are currently falling across Santa Clara County. This is partially the result of rapid unsustainable gains in recent years. What a difference a couple of years make. In 2017, we were reporting on the huge home price gains occurring across Silicon Valley. For a while there, cities like San Jose, Cupertino, Palo Alto were experiencing double-digit home price gains annually. Remember that, guys? We're covering it here on the channel. Woo! Silicon Valley real estate markets sees a crash in 2019. Last month we reported in a situation in San Jose, house values in that California city are dropping steadily, but the damage is not limited to that one of a housing market alone. Similar trends are occurring throughout the region. So it's not just Santa Clara, it's still not San Jose, it's still not Catalina, it's not Santa Barbara, it is all over California. According to the data published recently, the Santa Clara County Association of Realtors, home sales are dropped by 14% in June 2019. Woo! Compared to a year earlier, that's traditional single-family residence, in particular condo and townhome sales, dropped by 19.5% during the same 12-month period. Prices are dropping as well, and this is something that would-be home buyers should consider before making a purchase. Guys, do your research. I keep telling you guys, before you buy a house, the most important asset you'll ever own in your life. Housing bubble 2.0 lost its mojo in San Francisco Bay Area, and house prices drop 8%. So they're kind of pinpointing it. The other articles pinpointing it to Santa Clara and other areas. This one's pinpointing it to San Francisco. This one here, San Francisco, they're pinpointing it to that one. That is the California problem. And, people bought out of the markets and stuff. So they're blaming San Francisco. Californians be blaming every other city in their state to blame. Who is to blame for this house correction? Blah, blah, blah. You know what I'm saying? Who is to blame for the drop in prices? Where did it start? The most splendid housing bubbles in America. July update, year-over-year decline spread to Seattle. Remember what happened to Seattle, guys? Vancouver put their foreign buyers tax on. A pile of foreign investors went down to Washington State, Oregon State, and Northern California, and they just bought anything that was on the market. And look what happened now. It's, not looking good right now. So from its peak, Seattle, we've been covering Seattle for a long time. I remember back in 2012, 2013, you could go buy a decent house in Seattle for in and around 300 large. Now you can't even touch anything for 650. And that's what's happening right now. And there's the condo prices. San Francisco, we just covered that. And there's the K index right here, housing bubble 2. So it's kind of big when California starts seeing Perth house prices enter crash territory. Well, is this article 5 years old? Because Perth has been in crash territory for the longest time. When the hell was this thing written? No, this is a few days ago. So Perth, remember, mining capital of Australia, is in the pits. And it's in crash territory. Well, most capital cities stabilized in July. CoreLogic data released on Thursday showing dwellings in Western Australia capital fell another 0.5%, bringing their total to a 20.2% from their peak in 2014. So it's been on a decline since 2014, right? 15, 16, 17, 18, 19. That's 4, 8, 12, 16, 20 quarters of correction. 20 quarters of decline. That's what the UK is sitting at right now. Right now in London, they're in 20 quarters of decline. So that's what's going to happen in Sydney. It's going to have to follow the path of Perth. Sydney and Melbourne need that 20 to 30 quarters of decline, quarter over quarter. The median value in Sydney is 775 and 619 in Melbourne and 484 in Brisbane, 427 in Adelaide and 441 in Perth and 451 in Hobart. Do you guys remember when housing in Hobart was $150,000 before the mass exodus of people from Sydney and Melbourne moved to Hobart, to Tasmania? Do you remember? Do you remember when you could buy something for 180 grand? Hobart, $395. So if you bought 2 years ago in Hobart and you mass exodus is the city, not only did you get an affordable mortgage, but your house pretty much almost doubled in price. Woo! All right, let's keep going. Hong Kong protesters are rattling property investors and shaking business confidence. Oh, man. Assume the anti-extradition bill protests last for another 6 months. People's Liberation Party, PLA, steps in by then. Hong Kong property prices will crash at least 50 points. That's on a good day, 50 points. I see it going down 70, 80 points. People will be reluctant to buy because of the Chinese army's control of the city. The protesters are doing a great job of instilling fear in property investors. This could result in the best property market since the financial crisis in 2008, with the potential to have similar effects to severe acute respiratory syndrome in driving people out of Hong Kong. Ordinary people fear the police, the PLA, and the protesters, the current protests and their aftermath, current uncertainty and panic. Nobody feels safe. Where's that? Wearing the black or white anymore. It's only a matter of time before the trade war between the United States and China finally makes businesses abandon Hong Kong. This is pretty intense, people. And I got Steve the Plumber in the house, and I got Gary Medeiros in the house. And I want to thank, again, I said it at the beginning of the transmission, Steve the Plumber and Gary Medeiros for going to my dad's wake in Brampton, Ontario. I want to thank them. My heart goes out to them for taking their time in their day to come out and pay their respects to my father. And I got a lot of people asking me, how am I coping? It's been hard, guys. It's been really hard. And I got everything straightened out in Ontario. I had to come back here. I have a lot of loose ends to tie up here before my wife, before my family and everybody comes back here. So I got quite a few loose ends I need to tie up first here, guys. A lot of work here. And we were just in the middle of so many projects and things got bad for my dad, and I spent every minute by his side, and I want to thank everyone for taking the time for their kind words and everything, and moral support and being there for me. That means a lot to me, guys, that you were there for me when I was down. And I took 2 weeks off, and I'm back. It still hurts, man. It still hurts. And we got a same Belinda Lee Mercer in the comment section. Let's send her some prayers too. Her dad's in the hospital. He's in the ICU, intensive care unit right now, and things are looking pretty grim for him. So Belinda, we'll have you in our prayers tonight. Nicholas says, sorry for your loss, Mike. My sincere condolences. Yeah. Rainier saying, Mike, I'll pray for you and your family. Thank you so much, Rainier. Yeah, it's been really hard, guys. It's been really hard, guys. Yeah. Yeah, Belinda Lee Mercer. Let's pray for her and her family, please. And it's hard when you lose someone, you know. I'm gonna try and get on a Mike in the Night. I want to do. I want to get it on a channel that specializes in life after death. We could talk about a little bit of people that have had out-of-body experiences. We could do that on a Mike in the Night, because Mike in the Night's pretty much open night, that we could talk about these things. And some people, want to feel comforted by knowing that life goes on after death. I believe in that. It's in my religion, right? Anyways, guys, we're coming up to, hopefully, you know what, guys? Hopefully we could get Steve the Plumber on next week's show. Give us an update on what's going on. I'm not going to tell you what's going on with Steve. I'm going to let him tell you guys what's going on with him himself. He'll tell you guys. It's a pretty interesting situation he got himself in. And we should see if we can get Gary Medeiros on the show. And hopefully we can get him on the show too. And hopefully our friend that went to Hong Kong, flight gets rescheduled so he could go basically to Hong Kong and give us an outlook on what's happening on the ground. And yeah, that's that for Trends in the Housing Market. I want to thank our guests, Uneducated Economist. Don't forget to subscribe to his channel. It's right here. Uneducated Economist is a really good guy. I want to see if I could get crypto and markets on the show too as soon as possible. And I want to see if I could get Formafist on. I miss Formafist. It's been a while. I haven't talked to Formafist in a while. I just want to see how he's doing and what he's been up to and what he's forecasting. I wonder if anybody out there shorted Deutsche Bank. Yeah. Let me know what you guys want to do for Mike in the Night. If you want to talk about this uncertain economy, if you guys want to talk about, whatever you guys want to talk about, let me know for Mike in the Night. Let's get a good show on next Saturday. And I want to thank everyone for making this show very successful. And I'm just rambling here. But guys, don't forget to follow me on, where is it here? Let me move up to the top here. Patreon, if you want to support me and get me a coffee. Everyone here on Patreon, support me on Patreon. And then also got Subscribestar. If you want to get on Subscribestar too, I'm on there too. And I'm also on BitChute. I love BitChute. It's like the Wild West. BitChute is like the Wild West of when YouTube used to be YouTube. Like when YouTube used to be like it was, So I got some documentaries that I had on a backup hard drive that I threw up some audiobooks here. I'm going to give you my BitChute channel information here, guys. So if you guys want to follow me on BitChute, go to this link here. And it's like I said, it's like YouTube was at the beginning. When YouTube was like this at the beginning, it was exactly like this. It was the Wild West. A lot of swearing, so just be cautioned. There's a lot of swearing and a lot of unmonetized. And Minds.com, guys, don't forget to get on Minds.com. It's like Facebook, but they actually pay you to be on it. And there it is. I have 82 subscribers, and they pay you in these cryptocurrency that you could use to boost your videos or your stuff. And yeah, that's me with the picture of this is me with the picture of REM. That's me in the corner right there. So if you know what I'm talking about, REM, that's me in the corner. So we got hi, Mike. I told this summer would be the beginning of the correction of the housing market. Yep. Stephanie in the house. Rovengo. And we got Three Right Guys going on in the comments. Yeah, Three Right Guys. I might be back in Ontario soon enough, so don't worry, guys. Don't worry if I didn't get to see you guys. I still have to see Steve. And I saw them at my dad's funeral, but I actually want to spend some time with you guys. And yeah. Anyways, guys, thanks for tuning in. I want to thank everyone for taking their time out of their time to come and join us here tonight for Trends in the Housing Market. And if you just tuning into the transmission, it should be up and running in the next 45 minutes to an hour. Big hug to everyone. Thanks for the support. God bless, and have a good night, guys.